So as you, again, contemplate the process flow, you have to think about these things, because this is where the rubber hits the road. Getting an order and figuring out how much actual net cash you have to spend. This would be contribution cash, right? You have this cash now to, pay your people. You have this cash now to pay your overhead, buy new inventory, etc. And having that number down to the real number, I cannot stress how important that is. So just carrying this to the next iteration, we've talked about it in the Amazon context. Well, listen, the same thing happens with Shopify. You can go through ShipStation if you wish, or Parsimony has direct Shopify integrations. And that, whichever makes sense for you, it doesn't really matter, because it's going to manage the process and the details the exact same way, because the process is agnostic. You can be a multi-channel seller, right? And we'll talk about other channels here in a second. But whatever channel you sell at, you want the process of finance reconciliation or order fulfillment or warehouse management or whatever it is to be the same, regardless, to the greatest extent possible, to be the same or similar, with the least amount of variation possible. Once ShipStation makes a shipment for Shopify, assuming you use ShipStation, detail is recorded, including the pick tickets and delivery notes and so forth. And whether it's your warehouse or the 3PL or what have you, doesn't, again, matter. From my perspective, we are agnostic about these things. We don't care if you want to use your own warehouse, a 3PL, FBA, the ShipStation warehouses, now known as Deliver. All of that stuff is a entrepreneur choice. Make whatever choice you want. The system should just be able to reconcile the outcome of those decisions and choices. And so, by the way, once you have that type of detail, like I know what I sold, I know what I received, now you want to start thinking about profitability reports. And this, I have to say, is one of the least focused on areas from a proper finance basis. Is people are always talking about their turnover and here's how much I sold, and oh, look at me, I have such high turnover. And listen, turnover is fine. The old saying is, revenue is vanity and profit is sanity, right? So let's talk about what a profitability report should include, or what you need to create a profitability report. One of the first things you need is cost of goods sold. And that is, I would say, easier said than done, right? Cost of goods sold incorporates any number of variable expenses that are related to that particular, let's say, item. We'll just use one item on a sales order. So it's the cost of the manufacturing, right, at the factory. Let's think of it as an X works price at a factory. That means the factory made it, put it on their dock for somebody else to pick it up. It includes whatever freight was required to get it from the factory to the point of storage or point of sale. So that could be a 3PL, it could be FBA, it could be wherever. It includes any customs, it includes any fees or other things to clear customs. All of those things, insurance, any of that stuff should be baked in. And we use something called a landed cost voucher to manage those things so that we can apply things to a purchase order in a proper way. And this is not about purchasing. So I don't have a purchase order doc walk for you here just at this moment, but just assume that if you are putting your purchase orders in a system, and we'll use Parsimony as this example, that purchase order is going to have the original cost of goods from the manufacturer.